We've got some huge news today that's shaking up the semiconductor space. Reports that Nvidia is buying a $5 billion stake in Intel, and the market is reacting in a very big way. If we look at the S&P, just overall, we'll see the market is fairly mixed, but when we zoom into the semiconductor space in particular, the moves are fairly significant. We have Intel up an incredible 25% on the news, Nvidia also trading higher, around 2 to 3%, and AMD, unfortunately, whilst it is slightly recovering, down 3%, was as much as 5%, as investors do start to reassess their overall position. So what does it mean for each of these companies? Have the valuations shifted, and what should investors be watching? We're going to break that down today. Now, firstly, we have to just point out that yesterday we saw in quite some time the Fed cut the rates 25 basis points. Nice to see that more cuts are potentially on the way, and this has ultimately kept investor sentiment very strong. As you can note, it is still sitting in fact in greed. And if you wanted to wake up to some bullish news this morning, well, historically, after a fairly long pause from the Fed, when they have started to get back into the cycle of cutting rates, it has more often than not been very positive for stocks overall, for which we can look at history and see more often than not there are gains to be made. In fact, if we look at one particular study, in every single one of the 22 instances where there was a pause, and in fact the Fed started cutting, there was an average gain in the market 12 months later at around 14%. Bear in mind, this is historical data, doesn't mean that will happen, but is something worth highlighting. Now, if we get into the main piece of news, which is Nvidia investing $5 billion into Intel, not something that many investors did see coming, although lucky for the Trump administration, if you want to say that, they did not that long ago purchase a 10% stake in the company. And the main thing is, what is going to happen with Nvidia adding this $5 billion stake? Ultimately, there will be a collaboration of developing chips for personal computers, and more importantly for Nvidia is those data centers, which only continues to climb, something that we will take a look at. In fact, the CEO says, together we will expand our ecosystems and lay the foundation for the next era of computing. And the price that they paid for each share, well, looking very good now, $23.28. It is sitting now above the $30 mark. We can also see the statement from the chief executive of Intel: "We appreciate the confidence Jensen and the Nvidia team have placed in us with their investment and look forward to the work ahead as we innovate for customers and grow our business." Now, we can see from the press release that Nvidia have put out, this is a multi-year collaboration to co-develop products for both data centers as well as PCs. For the data center element of this collaboration, we can see that Intel will be building some custom CPUs that Nvidia can integrate into their AI platforms. And then for the personal computing, Intel are going to produce the new chips that combine the CPU with Nvidia's GPU chiplets. Ultimately, it's going to power the next gen of the high-performance PCs, and they're also working, in fact, to connect Nvidia's accelerated computing and the NVLink technology with Intel's x86 ecosystem, essentially fusing their strengths. So in conclusion, Nvidia's bringing the AI and GPU dominance, Intel bringing CPUs and manufacturing scale, and together they're aiming to reshape both data centers and PC markets. Now, we haven't touched upon AMD as of yet, but just bear in mind that Nvidia already has a very large stronghold on the data center market overall. 88%. If you just compare that to AMD, it is sitting currently below the 4% mark, and this is why it is a very strong move for Nvidia, because with Intel's help, the market is expecting data center growth to continue to climb, whilst Intel hasn't been in the best shape over the last few years, as well as AMD. It just looks like Nvidia is going to continue to capture more and more of the market, ultimately for what investors believe is the detriment to AMD. Now, data center is also expected to continue to climb. We have some estimates here at a 27% CAGR until 2034, and we've just seen Nvidia is likely to capture the majority of this growth. And we also have other analysts believing that data center alone will nearly triple by 2030, and there's no ultimately denying that Nvidia is the number one. Now, things may change very rapidly depending what comes out, but it's already at a large distance In comparison, if we just look at the most recent quarter, we have AMD reporting 14 billion in Q2. Just look at that difference to Nvidia at 147 billion. Yes, AMD has been increasing over the quarters, but nowhere near to that from what we note from Nvidia. And you could also look towards the CPU market where AMD has a stronghold, and ultimately analysts were expecting that to climb over the next few years, taking away market share from Intel. This could be something that actually goes the other way. With the help of Nvidia, we could see Intel, rather than decline and lose some of their market share to AMD, actually see the opposite, and this could be another worry for AMD. However, having said that, over the last 10 years, whilst Intel does hold the largest market share, in fact dropping from 86% to 76%, AMD increasing from 14 to 24, this is another thing that will come into question. How much is this going to affect AMD moving forwards? Clearly, investors do believe to some degree, hence why we are seeing the share price drop. And also remember, it wasn't that long ago that the US, as we highlighted, took a 10% into Intel, so they will be very happy today because ultimately they did pay quite a low fee in comparison to today's value. We're talking $20.47. That's also lower than what SoftBank did buy at $23, and with the share price now sitting above the $30 mark, the US government is already sitting on a 50% gain. And as we said, especially in this industry, news does come thick and fast. Just yesterday, we heard that China are in fact telling their technological firms to stop buying chips from Nvidia. Whether or not that will affect the company in the longer run, we will be able to find out in some of the earnings that takes place over the next year, with perhaps their reliance moving away from Nvidia and to Alibaba, something that definitely investors are starting to buy into a little bit more and more, as the company is up 94% in the last year. Year to date, very similar, in fact trading right there towards 52-week highs. That is another question Nvidia investors do need to consider. Yes, there was perhaps some positive news, but there are also some bear cases that we need to consider for a company that some investors may believe is getting into overvaluation territory. If we look at the forward valuation today, it sits at 31, which is below the 5-year of 41. So already, based on this, although we never look at it in isolation, we do get an undervaluation signal. Something that is also confirmed when we look at the blue tunnel. Herein lies the intrinsic fair price. As of today, disparity between where it sits and the lower end, so potentially severely undervalued. And what's great to see is intrinsic price has been increasing over time. And if we were to zoom out to the last 5 years, the picture is very clear. This company, at least over the last few years, given the dramatic rise in the intrinsic price driven by data center growth, has more often than not sat in an undervaluation stage. That is where it looks to be as of today as well. And the other metric that we do like to look at is the price to earnings growth, where for Nvidia it sits around the 1 mark. Now this is actually what we would call potentially a very, very attractive opportunity, below the sector at 1.9, below their own 5-year average. We're talking at a 38% discount. This is one that, yes, has had a very strong run, but could still look undervalued if you believe in the longer term their growth capabilities, for which we can see is very strong. 72% last year, well above the sector, not too dissimilar from their 5-year. They're expecting 65% this year, again a lot higher than the sector, well above their 5-year. So just picture this, the company is trading at a large discount to their own 5-year average, but they're expected to grow their revenue at a faster rate, and it doesn't stop there. They're also anticipating to grow their earnings per share 36% above their own 5-year of 29 and well above the sector. So just something to consider for Nvidia, where we can get into the valuation. We'll do the same for AMD as well as Intel. Now we do have two prices. Intrinsically, $164, scenario 1, scenario 2, $178. If we go to the first one, where we get to 164, this is using the DCF model, in fact, on both accounts. We've used 20% moving forwards. Last 5 years, triple digit growth. Last 10, exactly the same, 24 to 25, in fact, 125. Now, what we've done with this model is essentially just use their 2025 position with an increase of 20%. And as you can note, we have a low, medium, and high. 15, 20, 25. Numbers are as always subjective. You can grab a copy of this model by clicking on the pinned comment below, running your own numbers, whether it is for Nvidia or any others, but based on 20% and the discount rate, we get the present value of future free cash flow and terminal price, add together with the cash, subtract total debt, get the equity value, divide by the shares outstanding, getting to 164, actually indicating downside of 6%. That is because as of today, baked in is 21.2% growth to the future free cash flow moving forwards. So if you believe it's undervalued, you need to estimate growth that is larger than this. For example, and for transparency, if you believe 15% to be more appropriate, 116 indicating downside of 34, and 25% we get 229 indicating 31% upside. Now, typically on the channel, we do like to use the middle rate, which as of today is 20%. And what this is highlighting is, given the current price does sit above, you're not getting a margin of safety. In fact, it's trading at a 7% premium. Now, typically we do like to use a 10% MOS where we buy, execute if it meets our 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that, based on this scenario, a buy at 147, at 20%, a buy at 131, and at 25, sitting at 123. So scenario 1 for Nvidia, a 7% premium. Wall Street, they see this $210 into next year, 20% upside. Now moving on swiftly to the next scenario at $178. Ultimately, the difference here is for 2026, we have extrapolated their Q1 and Q2, which you could argue does give a better reflection. Now, on a reverse DCF, pretty much around the 20% mark. That is why using this, we actually don't see it too dissimilar from the current value, 175. In fact, you are getting just a very slight 2% MOS. Again, we'll do the same at 10%, a buy at 160. At 20%, we are talking $143, and at 25, $134. Wall Street price target 210 into next year. Let us know your thoughts on everything that has gone on today, including Nvidia, whether now after the news it is a buy, hold or avoid. Thank you to today's sponsor, Snowball Analytic, and they're much more than just a portfolio tracker. They have a ton of useful features as well as a user interface that is extremely easy to consume. They highlight a lot of information. You can see the largest gainers for the day as well as the losers in your own portfolio. They highlight some of the recent and upcoming events, which include both earnings as well as when your company's dividends are being paid out. And for the dividend lovers amongst us, they also highlight the different ratings that each company holds in terms of their dividend safety, really pinpointing those that maybe you want to take a further look at. A few really cool features that we want to highlight, for example, comparing your portfolio against the S&P. For those who perhaps want a bit more inspiration, they also tell you when companies are expected to pay out their dividends, and one of our favorite is really giving an in-depth view for every single company. For example, if we take a look at Nvidia, one analysis here is purely just on the income statement, but it doesn't stop there. We can take a look at the quality of the company in terms of the balance sheet, the cash flow, as well as some very important financial metrics that we always like to look at before considering a company to be a buy. And the great thing is, right now they do have a 30% off discount as well as a free 14-day trial. So check them out, click on the link below and grab a very nice discount. We can then move on to AMD, where whilst it does get a D+, given on a forward P, 41 is sitting above the sector, you're paying a 63% premium, and in fact against their own 5-year, you're paying a 5%, but more importantly, and maybe more reasonably, on a price to earnings growth, 1.32, that is below the sector at 28%, but actually it has historically been at 1.2, so you are paying a 10% premium, definitely something to consider. Now the growth also looking good, clearly not as strong though as Nvidia, 27% year on year, 21% expected this one. It is above on both accounts the sector median, but actually they're growing, unlike Nvidia, slower than they have done historically. Earnings per share, conclusion is the same, 31% with their own 5-year at 33. Sector though is lower at 15. Now our intrinsic price for AMD gets to $162, again using the DCF, and in fact we are using the same growth rates, 20% as the mid rate, low, medium and high. We see a little bit less baked in for AMD after the drop at 18.7%. Although if you do want to see at the lower rate of 15, we are talking $120 downside of 20. If you believe we're being way too conservative, 25%, 217, 45% upside. So using the 20% where it does sit just a little bit higher, you are getting a 7% in terms of an MOS. If you wanted 15, we're talking 138. At 20%, a buy at 130, and at 25, around the $121 mark. Wall Street themselves, $185 into next year, 23% upside. Let us know your views on AMD. Is this concerning? Is this in fact now a buy, maybe a hold, or a sell? We'll then move on to Intel, where it does get an A-. Now the forward PE does sit very high given the earnings expectations, although things could change very quickly, so maybe not one that is reasonable to note. But if you're someone that prefers to look at an EV, whether that's on sales or in fact EBITDA, it does look very attractive in terms of a discount against the sector overall, but again, one that is perhaps, at least for now, a little bit trickier to analyze. That also goes for their growth, which wasn't looking good, down 4% last year, expected to be flat this year, and you can see the sector looking a lot better, but actually a little improvement to their own 5-year, which just tells us their revenue has been decreasing over the last few years. Now, our intrinsic value, again derived from the DCF at $27, will ultimately come down to what you see for the growth rates. Now, we have increased these slightly from previous Intel episodes, but as we said, is subjective and is up for you to decide what you believe to be most appropriate. Main thing here is though that baked in today is 11.6% growth to their future free cash flow year on year from an estimation for the next full accounting period. If you believe this is appropriate, then as of today, trading at a 13% premium. We also notice Wall Street with their price target at the moment haven't baked in this news, so it isn't probably relevant, but we'll just highlight previously the upper end of Wall Street's target was at $28. That in turn does come downside 10%. Let us know though on Intel, maybe this is one now considering buying. Maybe if you've been holding for a long time, you're thinking actually about dumping the position, but do let us know. We can also have a quick look to see what institutions are doing with the company. Nvidia, in fact, 65% ownership, 107 billion worth of selling in the last year. A lot more buying, 328 billion. The same to be said in Q2, most recent quarter, 147 billion buys versus 23 billion sales. In comparison, we have here Intel 65% ownership, 5 billion selling, more than twice the amount buying in the same time frame. Actually a lot more buying in Q2. Institutions clearly very bullish. 4 billion buys versus 500 million selling. And actually the trend is very similar for AMD, 71% ownership, 22 billion selling, only a little bit more buying though at 27, with around 3 times as much buys in Q2 than sales. But we also, before we end the episode, want to briefly touch on Taiwan Semiconductors. Now they're not directly encaptured within the deal, but longer term, if Intel proves it can reliably manufacture for Nvidia, it could slowly chip away at TSM's dominance. Now currently they're up around 57% over the last year, 33 year to date. They've outperformed massively the S&P, up 1,211%, actually trading pretty much at all-time highs, with a double strong buy from Wall Street and Quant, a buy from Seeking Alpha, very respectable. But actually on a forward P of 26, it sits above the 5-year of 22. This is what we would say potential overvaluation signal, and that is also encaptured on the blue tunnel where it does sit outside. In fact, maybe for the first time in quite some time in the last year. We do notice Liberation Day, you could have bought this severely undervalued, and as always, high quality companies, when they are undervalued in a severe way, we will let you know, so make sure you're subscribed and notification bell is on, because as we note when zooming out in the last 5 years, the market does give investors opportunities to buy companies like TSM at a very attractive price. Similarly though to the previous companies, also on a price to earnings growth looking attractive, 1.24, that is lower than the sector by around 33%, and their growth also strong, 40% last year, 27% expected this year, above on both accounts the sector. They're also, unlike AMD but similar to Nvidia, growing faster than they have done on a historical basis. Conclusion again the same for EPS, 22% above historical 19 and well above the sector at 15. Now before we jump into TSM's valuation, we want to let you know we have released our latest free weekly article. We drop one every single Monday morning to your inbox completely for free, covering severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll be able to gain access to severely undervalued stocks for the month of September. Lots of information for each one, the upside that Wall Street themselves see over the next year. And on top of that, you can grab a very recently released copy of stocks that Wall Street themselves believe have the most upside in the S&P today. So click below, you can sign up and read straight away. Now our intrinsic price gets to $272 for TSM, which as always you can click below and grab a copy of this model, and that indicates around a 5% margin of safety. If you wanted 10, it would be a buy at 245, at 20 around 218, and at 25 around the 204 mark. Wall Street themselves, whilst very bullish, see this at 278 into next year. We're talking 7% upside. But as always, let us know your thoughts overall. And don't as always forget to sign up to the free weekly newsletter, grab those spreadsheets, come and join us at Patreon where we cover our buys and sells. And as always, have a great day. We'll see you all on the next one.